One of the most important questions we get asked from our Factum clients after they have started the process of becoming your own banker is, how much do I pay my banking system back when I'm using policy loans? And this answer is all up to you. And as your financial IQ increases and you learn more about this process and you grow, learn, and develop, your answer will probably change over time. And so what I would do is ask a follow-up question, which is, how valuable is your capital? And your answer should be, your money is more important than any other source of money. So we should treat it a little bit differently. And Nelson calls this economic value added. So if you read his book, Becoming Your Own Banker, he talks about the concept of EVA, economic value added. And this whole entire concept is nothing more than a behavior of money. And if you can master the behaviors of money, you will always do very well financially. And so this concept is, if you are going to borrow money from a bank or another financial institution, they expect you to pay them with interest because their money has a cost. But yet when we use our own money, pay cash for things, for example, we never refill that bucket with additional money. Why are we treating our capital like it has less worth than the banks? And this is a paradigm shift that you have to have change when you start thinking like a banker. And so for me, my rule is 10%. I won't borrow out for my policy unless I'm going to replace it with 10%. That's how valuable my money is. Now, as a saver, average Americans are saving less than 5% of their income. So if you want to be above average, you need to save above that. And I would recommend saving anywhere from 10 to 30%. If you read any financial book, they're all going to teach you one rule: pay yourself first. And typically that amount is always 10%, which is twice what the average American is saving. Now, if you can get it between 10 to 30, you're really going to have a well-capitalized banking system. So this is currently what I do. I currently save anywhere from 10 to 30% of my income into my private banking system. Now, if I'm going to take a policy loan for something, as the borrower, I always replace the capital that I'm borrowing out with 10%, because that's how valuable my money is. Now, there's a few other reasons why I do this. I was very fortunate early on in my career to learn about this banking system from some very large second and third generation families that have been doing this. And so I picked up on some of their habits that they have implemented in this system that allowed them to be incredibly disciplined when it comes to banking. And so, as we know, when you are borrowing money from a life insurance carrier, it's not coming from your policy. You're borrowing against the cash value, which is why your money never gets interrupted, because you're not using it. You're using the insurance company's money. So when we take a policy loan, it comes from the insurance carrier, and they have a cost to their money. Right now, it's close to 5%. So if we borrow from them, we are going to have to pay the insurance company back with 5%. Now, if we don't pay back more than that, okay, that's just a wash. There's no extra premium that can be paid to the policy. You see, think about this from a banking perspective. If a bank loaned out money or was paying 5% and they loaned out at 5 and they only received 5 back, they would never make any money. They have to loan out money and get a higher return back from what they loaned out. That's the only way they make money. So if I have a rule that's 10%, that means 5% of it can go to the insurance carrier, and the other 5% is going to go back to my policy in the form of paid up additions, which increases the cash value and death benefit of my policy. So do not mistake the policy loan as this magical, mystical thing that just makes your banking system grow. It's not magic. You have to be disciplined and you have to understand what's going on.